Don't panic. When the stock market crashes. Strategies to take advantage of a stock market crash. Are we in the bull market or bear market? Absolutely bear. Both NASDAQ and Dow Jones hit record highs in December 2024. But since January 2025, the stock market has been on a roller coaster ride. We have seen some major drops already. A crash of 20% or more hasn't happened yet, but it could be coming soon. Warren Buffett's Berkshire Hathaway sold a ton of stocks at the end of 2024. They have been sitting on a bunch of cash and are now more interested in the Japanese market. That's a sign that Buffett is predicting that a U.S. stock market crash is coming soon. Many of us have seen at least two major stock market downturns, like the 2020 COVID-19 market crash and the 2008 financial crisis. Some people even experienced the 2000 dot-com bubble burst. It seems like there is an economic cycle behind it, or maybe it's just triggered by special events from time to time. Either way, we know stock market crashes happen occasionally, but the good news is that we have always seen stock market recoveries after every crash. So, for average people like you and me, is it really necessary to panic? No, don't panic when it happens. There are actually strategies to take advantage of the crash. These strategies are proven to be effective. Tip number 1, Roth conversion to optimize tax. Working class usually puts pre-tax money into 401k, 403b, 457b, and other retirement accounts. These accounts usually invest in mutual funds and ETFs. When we withdraw at retirement, the tax we pay is not only on the investment cost, but also on the profit earned over the years. Statistically, mutual funds and ETF in the U.S. make sizable profit over the decades of working time. Therefore, it is definitely not an optimization of the tax. To minimize the tax on the profit earned over the years, we want to roll over into Roth accounts, like Roth IRA, earlier on before the profit grows too big. Paying a little tax now leaves a high tax-free profit for the future. An even better way to minimize the tax on the profit earned is to roll over to Roth accounts at stock market crashes when the profit temporarily shrinks. The lower the profit, the lower the total tax. Once the money is in the Roth IRA, we can invest back into the same mutual funds and ETFs, or invest into a broader variety of financial products. The stock market will always recover afterwards. The future profit is thus maximized and all tax-free. Tip number 2, invest in inverse ETFs in the bear market. Inverse ETFs allow investors to bet against the market. They give a result similar to short selling the stocks in the index. It is a known investing option that many professional investors use to win in a recession. These investments are much safer than short-selling stocks and are more diversified. A typical inverse ETF against the S&P 500 is ProShares Short S&P 500 with the symbol SH. Another known inverse ETF is ProShares Short QQQ, which is tracking the NASDAQ. Its symbol is PSQ. Inverse ETFs are short-term strategies in the stock market because the bear market is not there forever. Besides, most inverse ETFs come with leveraged 2x or 3x inverse ETFs. Investors should be very careful because leveraged ETFs have compounding effects that could lead to larger losses than expected if investors bet wrong on the market's direction. That's why average people with risk aversion should stay away from them. Tip number 3, invest in assets other than stocks. Currently, what investments are better than the U.S. stock market? Gold, cryptos, real estate, or others? Gold has been money longer than any currency in history. It has been the best long-term store of value. Whenever there are wars or financial crises, people buy gold, considering it the safest way to maintain wealth. A recent gold demand driver is the advancement of AI technology. Compared with the regular AI chips, the high-end AI chips use triple gold for high-performance computing due to its superior conductivity and resistance to corrosion. Almost all developed countries have set AI development as critical for national competitiveness. That defines the strategic position of gold in the AI era. Current gold value has surpassed the historical high of $3,000 per ounce. Most international currencies are measured by the US dollar. The US dollar itself is measured by gold. With the US dollar interest rate decreasing in the foreseeable future, gold's value is likely to go up even more. That's why gold is a great investment right now. How about other options like cryptos and real estate? Predicting the trend of crypto values is tricky due to their high volatility and risk. Real estate is affected by interest rates. Since mortgage rates are still high, investing in real estate might not be the best move right now. If you know any better choices of investment for average people like you and me, please share your thoughts and comment below. Tip number 4, hold cash and buy at low price. Buy low and sell high is always the basic principle in stock market investment. Bear market is the best time to buy in. Learn from Warren Buffett to hold cash at this time. When the stock market crashes, buy in. It's all about being patient and catching the moment. Conclusion: don't panic when the stock market crashes. We can take actions to take advantage of it. It also works if we don't do anything, because the stock market will recover afterwards for sure. One thing we want to pay attention to is that we don't want to borrow money to speculate in the stock market, because it's always a gamble on the market's direction. Those who use leverage to bet on financial derivatives and think they'll get rich quickly often end up broke. Stay away from high risks and play it safe.